Well, alrighty. We had a busy day yesterday. Yeah, it looks like today's going to be busy as well. Expect to see some profit taking with a large move up like that, but it doesn't really affect us. So we're just cleaning up our little areas here. Let people know what we're doing. Looks like dividends today are going to be a small amount on these accounts. Looks like at 856. Looks like we're working on 277 days without a loss. It is Tuesday. So what's our idea for today, huh? Well, we'll do the same thing that we do every day. We're going to look through and see. We'll go over onto Mosaic here. Get an idea of what's up, what's down, look at a few charts. We don't make any decisions on which way the market's going. There's no reason to. It doesn't matter with this system. You take a motion out. All we're doing is looking to see where our position is in relation to our break even and our profit target. Nothing else really matters. I mean, we have specific rules. We follow those, and all we do is collect dividends and we make trades for profit. We don't worry about the downside. It's coming, and nobody knows when. Things don't just go straight up, and this is a remarkable market, and a lot of new traders, new investors, they're jumping in thinking they're probably the ones pushing this up. There's a lot of money out there, and it's going to make for a pretty hard fall when it does come down. I don't know when it's coming down. Nobody does. So why worry about it? You just be prepared. But yeah, looks like we have, let's see, 2, 4, 6, 8, got 10 stocks paying dividends tomorrow. And you can see those. I'll get off of Mosaic here. You can see these ones with the yield sign on it, or alert. PKO is one. I'll just go down through the list here. Looks like what's this one? ACV. Let's go over to another one. Looks like we got DSL. Take a look at the chart. Of course, this is a CEF. Anytime you see dividend payments this close together, it's month to month. You see them spread out, probably quarterly. You can see a semi-annual in there. It's rare that we would go with a annual dividend payer unless it's extremely high. But just looking around, we'll go down through some of these. AGNC, another monthly dividend pair. Now AGNC, as you can tell, it's got a range in this 6-month window from 13.52, as I'll say, to 16.52, so a $3 range, right? So you know it's not going to move much. These are your meat and potatoes of your portfolios that just keep on increasing as you go up in your portfolio sizes and you add more money to them. In this case here, we're not adding any money external to what the account can make, just to show how this will grow over time. You know, through your trades and through the amount of dividends that are coming in. So it's a little easier to see what it can actually do, and then the power of the occurrences. When you start adding money to your account, then of course, you know, once you get up to a certain level, you'll be able to start doubling what you're actually making. Instead here, if we look at these accounts, these values here would be, twice as much, based on, if you just had the 10%. If you're fully, if you have full max shares, then of course, something like this up here at 129, this was a max share event. Okay, this one here was a max share event. But because this was, you have to look at the dividend amounts, right? And this one was low, and that's why we closed it at. So, and we don't care what this stock does after the fact. I don't go back and look and follow it unless if it comes up on the scan, fine. But you need to focus your mental energies to the stuff that you can control, right? With the stuff that you can work on. You have no control over where the price goes, so don't think that you do. But we'll go back over here and see where everything is kind of popping. I don't know what the market's actually doing. I know Bitcoin's almost up to, I think it hit 55, which, I play around with it a little bit. Yeah, I mean, we're showing S&P. Let's see what this one's showing, because I get conflicting. Yeah, so we're showing a pretty hard up move this morning on the open. So we got about 25 minutes. We'll see if that holds. Looks like NASDAQ's making a comeback, but I think this will probably, spike. Could continue, especially with the amount of money that they're injecting. We'll just have to wait and see. I mean, it doesn't make any difference. I don't know where it's going. You can guess all you want, and if it makes you feel better, guessing, then great. But I stopped guessing a long time ago. You see patterns, but a lot of times those patterns can fool you. Whatever you do, don't look at last performance on the chart. That means nothing. The price is what it is. Like this is trading at 13.45. It means today, it's like if you walked into a store and said, hey, CLM, this is chocolate bar, it's $13.40. Do you want to pay that for it? And they're telling you, well, look, if you buy this, we'll give you 16 cents a month just for owning it. But don't eat it, just hold on to it. So you can hold on to this for a long time and get, what's the dividend yield on this? Back over here to Classic. People miss out on this. This is the most powerful tool that you have. And yeah, we're 14%, and it's down a little bit, about 20 cents or 25 cents from a year ago. And the TTM is, trailing 12 months. You can look at this and say, okay, well, now I'm making 16 cents per month, per share. Overall per year is paying $1.92 per share. That's not too bad. I try to keep in that range of $1.20 on stocks that pay quarterly. I am willing to go lower, make sure that the interest or the dividend yield is higher when you see these CEFs. But CEFs make up the meat and potatoes of the smaller portfolios. And as you get larger, if you just keep those in your portfolios, you'll always have a constant stream of income coming in. When you start getting up into the 100 to 200,000 mark, you can see the power. Institutions invest heavily in CEFs, and the funny thing is they're not talked about. There's a reason for it. And you can make up whatever reason in your head that you want to come up with, but they trade them quite frequently. Plus, they just constantly generate income. It's funny, they say, well, I only want an income producing thing when I'm getting ready to retire. You should be in growth stocks. It's like, well, it's if you can make that kind of money percentage wise when you're young, why wouldn't you want to make it when you're young? If you can make it when you're older, why wouldn't you want to do it when you're young? You don't have to do anything to make money. If you're trading, you got to be in front of that screen. But this system, it's like, hey, you have the best of both worlds. You come in, Every day, it's like brushing your teeth. You brush your teeth in the morning, you put your long positions in, say, okay, I'm buying this, based on whatever you choose. That night, you come home, it's like you eat your dinner before bed, you brush your teeth, right? And say, okay, what's sold? Boom, 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 boom. Or what did go long? It's like, okay, I put in my sell limits, I go to bed. That's it. You don't have to worry about it. Most people are stressed out constantly because they're traders. And you see it's that high intensity, it's high adrenaline. You know, if you want adrenaline, get outside and get on a bike, go run, do something. But sitting in front of the computer trying to make money all day long, it's a hard way to go. And chances are you'll spend more money on packages and monitor setups. Like, it's unbelievable what people do. All you really need is one screen, and a plan. And of course, the more capital you have, the more money you're going to make. That's a fact. If you only have $1,000, you're not going to turn $1,000 into $1,000,000 in a year. Not unless you've got some crazy idea that nobody has ever thought of before, but it won't be in the stock market. What are we looking at here? BGS. All I'm doing is looking at majority of these ones that are positive. You'll see that have high values in the unrealized profit. There tend to be CEFs that have just kind of, floated their way up, and eventually they'll, hopefully go up high and, cash out. So we're targeting that $1.32, right? At 132 shares, that should be 100 and, well, let's just add it up. Brain ain't working this morning. So if it was 100, it'd be 132 bucks, but you get to 132 times $100.32, it's $174. Right? So it may take you a year to get it, so what? But that's what you're making every year off this position. But if you can do it in a couple weeks, then voila. Meanwhile, I'm making 11 cents. I'm making 1/12 of that each month. The whole idea is to try to get it faster. If you can do it more times, hence the faster veg is. And we talked about those in other videos. Let's see here. LMT. Yeah, I don't know what it's doing. And just the price this morning is $342.80. So I'm willing to sell it to somebody at $370. All my shares that I have 4 of them, right, in this portfolio. So I'm willing to sell those. Now, the larger portfolio, if you had, well, in this case here, the max shares are 4. It doesn't matter how much money you've got until you get over the $1 million. You just don't want, this is a high value stock. You don't want to be getting into, buying, 100 shares at 342. That's $342,000. I don't think, or I'm sorry, 30, let's see, 342.60 by 100, at $34,000. So that would be this entire account, right? Well, half of it. So you're going to sit on that money until it comes back. If it comes back, you don't know, but you're going to make that $10. So you're going to make $40 and, well, $41.60. Meanwhile, I can be making a lot more money with more occurrences because I'm not invested in that. Now, the big boys understand this. They have the clout. They have the numbers. They can come in and make that 3%. That's actually a really good dividend return, for the price, as it's 3%. And you cut this in half, the price in half, this jumps to 6%. You cut it down another half, goes down to 9%. So what are we looking for here this morning? Okay, silver looks like it's jumping up. It used to be years ago you could buy some property at a fairly reasonable price, and you could make money off the rent. You know, if it was paid for, yeah, you could have a decent little income coming in, and you get a couple more homes, and you know you're set. But now the taxes and the way they treat real estate, I mean, unless you're buying condominiums or I'm sorry, apartments and things like that, I mean, it's still a numbers game. But boy, do you have to really invest a lot of money. And there's the upkeep, there's the tenants. You know, it's just an ongoing mess. So I like the um, independence of the stock market, where it's, you know, sure, it's going to come down at some point, and not just these small accounts, but the bigger accounts that I do, they're going to come down in value, right? But it doesn't mean that they're going to stop paying dividends. I know that the trading will, it'll slow, but it won't come to a stop. I've been through this before. You'll start to see how your dividends will actually grow your account. And if you position yourself right and take the necessary steps to reduce your risk and exposure to the downside, then you're going to be better off when it, you know, comes to the bottom and starts to come back up. We don't know how far it's going to go down. We don't know how far it's going to go up. So we don't worry about those things. They're out of our control. But what we do is we plan around it. You know, everybody likes to talk about black swan events. It's like, hey, it'll probably happen. What are you going to do? Warren Buffett, you know, I use his name more than anything just because he's proven to everybody how to do it. But it's funny, there are a lot of people that follow Warren Buffett, and what is his name? Charlie Munger, his partner. You know, but it's amazing how impatient people are, and that's what makes everybody different. So not a lot of people like this approach, and that's fine. There'll be the ones that, you know, complain about the system, that it's rigged and everything else. And you know, it's, if you believe a casino isn't rigged, then you know, you'll go in there and have a good time and lose all your money, because they're not there to make people rich. And there's really no way to beat the casino. But the stock market is only a casino if you're leveraging money. Once you start leveraging money, that's when you start getting into problems, because it takes away hard-earned money. You know, if you don't have any money and you're starting in the stock market, the best place to start is investing, because then you start to realize the power. And then the trading should be your second aspect. Trading first is, it's very simple. You know, you buy something, you know, and you don't sell it at a loss. You decide, hey, I'm going to take this $1,000, I'm going to put it in the stock market. It's going to be there for the rest of my life. It's going to give me dividends, you know. And if, I mean, you can, there's so many online calculators out there that you could look at and play with that tell you how much you can turn $1,000 into if you just wait 50 years. And that's fine. There's nothing wrong with those calculators. But what I'm saying is, you can increase your returns by doing some simple risk prevention measures and understand how to trade correctly at the correct times and how to take profit. People are scared to death to take profit because they feel like, oh, I'm going to miss out on that move. Like, let's take this chart for example. We'll just use this. let's say you bought down here at this, let me put a cursor on here so we can see it a little better. Where the heck's that thing at? There it is. Okay. Well, let's just say you bought it down here at 71.08. Right? Let's say 71. You got it at $71. So you bought your 100 shares. So you got $7,100 invested. And that thing goes up, 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 and you're just like, man, I'm going to ride this all the way, all the way. And you have, you're up here, and this day comes, and you're sitting here at the top, and you're like, yeah, well, I'm just going to sit on it because I'm making dividends off that. Well, you've gotten your one dividend payment, right, for the quarter, and you're sitting up here at the top, and you say, yeah, I'm just going to sit on it because I was told to buy and hold. Well, 70, what do we get it at, 71? She starts coming down. You're like, oh, I can't go down that much further. Can't go down that much further. No, well, here comes the next dividend payment. Yep, okay, so you've been paid twice, right? But now you're down to 75.40. You could have taken a shot right here and said, hey, I'm going to get that dividend payment for the full year, right? $83 or $83 times 4. So that's 272. Hold on. 83 times 4, so 332. So you could have got your 332 right there for the full year in that next week, or somewhere in here, if you had just waited. So it had to go up $3.32, and you're at, right? Problem is that could have went down, right? But had you taken it here, you might have been able to get back in up here, right? And then got that dividend payment, and then got at again. But you decided to ride. You got the one occurrence, you missed maybe 2 or 3 occurrences, and now it's coming back down, back down, back down. Oh, you get your other dividend payment. So it's 2 versus 3, 4, and maybe you got in up here at the top, and you're like, okay, I'm going to dollar cost average it down when it comes down, but you're not buying 100 at this point. You're only buying the max shares, which in something like this might be 1 or 2 shares. Now you're back in, you get your other shares, and you're back at. So it's just another way of doing it. But you can see the power of the occurrences. You can increase the amount of money that you can make in a shorter period of time and try to capture the full year's dividend in a couple weeks. I only work with weekly charts. You start getting into daily and minute charts and all this other stuff. It's too much noise, and there's really it's not in the formula. You're never going to, if you're trying to catch pennies, it's a losing game. You just waste your time. Too much screen time. There's other things that you can trade that are much faster, but the basis for all your portfolios ought to be dividend income. Go over to Stock Gurus and look at the size of some of their portfolios. They're massive. Thousands of different stocks. That's how they get diversified. But yeah, we got about 7 minutes, so let's go down through the list here and get this updated. SLVO. Like as always, we always try to keep this is our basis. This is what we like to keep, our meat and potatoes. Each week we get a new scan that comes out that tells us what fits our criteria. We can see here that anything that's highlighted with a color is in one of these 3 portfolios that we're showing. There's one that's left to be picked up. If we go back over here and we'll look at ETB, yeah, and see it didn't come down, it just went straight up. So it never did tag that. It shows it did, but for whatever reason we didn't pick it up. Sometimes that happens. It's because of limit orders. You might have been too far down in the queue, and there was just that much volume that pushed the price away from you. So you don't worry about it. You don't chase it. You just whatever. Move on to different things. It doesn't matter. This could go up from here, can come down from here, could stay the same. This limit order is good for the week. All the others that are in the portfolio, or all the others that are in the scan, they would be the ones that are more quarterly pairs, and then we go off the Vegas more. And that's the volatilities. To try to target the ones, and we base this all on the max shares. Okay, the formulas that we've come up with, this all has to do with the size of your portfolios. This protects you. All right. So where were we? CLM. TLT is finally moving up a little bit. Might be another couple weeks before that shows up, but we'll see. Yeah, I have no idea what's going to hit today. I can tell you this one's going to hit. I'd be lying. I have no idea. But yep, everybody wants the guy with the crystal ball. I do not have a crystal ball. All I do is take consistent profit out of the markets. But if you can see it on these small accounts, you'll be able to handle a large account. But if you're looking to make $1 million overnight, there's plenty of people out there that will show you the way. Don't be disappointed. Let's go back over here. See what, yeah. Well, just sit back here for the next 2 minutes and see what happens. And all we do is manage. Next half hour, depending on how busy it is, it might not do anything. We might sell a whole bunch like we did. I think we had 10 or something yesterday that we sold, or 12, something like that. There's no set amount. I mean, depends on what you have in your portfolio and what's actually moving. So we just take what the market gives us. You can't force anything. You can anticipate it, make decisions on that, but ideally the system works because you're not overextending any one position. Funny thing is, if it's going against you, you end up with max shares at the bottom, right? Or what would be a perceived bottom, because you really don't know.
And it might be different for any one stock, but the ones that we do have max shares on, like HCAP, that sucker's probably been down, but we don't put any more money into it unless the scan tells us that we can. If it tells the max shares have gone up, then we can add to it. If it's lower, then we wait until it's above water and then we make it even. We never lose money. But ideally, what's happening is when we see this is going to be an interesting lesson for anybody that's following me. When you see this market come down, I'll be involved in it unless I'm hit by a truck or, something happens to me where I can't show this to people. But it's going to be interesting to watch people scramble to try to get out of the market, and I'll be the one that's buying. Won't be buying all the time, but I'll be buying off what the scans tell me to do because it's a risk factored thinking. There's only so much money I can put in on the way down, right? All right, first sell of the day. Kind of like clockwork. It's kind of weird, huh? SWM. So I'll go over to that. That was on this other account, so I need to. So what we do, this is just what I do. You can do whatever you want to do, but I stick to these same type of things. I stick with the thing I've done for years. Do things the same way every time. You can see where we bought last week and we sold this week. A lot of people say, well, that's an all-time high. You better short it. Yeah, you do what you want to do. The scan tells me I'm good. All right. So we'll take a picture of this, send this on to some of our followers on Twitter. Chart image. SWM. Okay, over here to Twitter. See, no stress. What's the percentage on this one? 3.6. So you actually made 3.6% profit. So if you understand scaling, if you had 1 share versus 2 shares, it's still 2.6%. So it's $10 versus $20. So $3.60 versus $7.20 based on the size of your portfolio. You have to get this into your head. Alright, PXD, pretty sure that's on the scan. Get this off the screen. Yeah. But because this comes in at 0.82 shares, we cannot put this in. So we just pass on that one. And the reason being is because you have to stick to your rules. Even though it's high on the Vega, this next one that just went off FANG, it's definitely one that's tradable. I just got to get it on the right account. This one, so I'll go to the chart, see what it did. All right, so in this case here, we're going to trail this bad boy by $1.50.
And we get to go 1 share because that's what it tells us to do. Comes to 1.31, so it's not actually 1.5. So, see, we've got some coming down now, right? We know that because it's hitting our alerts. So we do the same thing every time, but we're going to trail these because this gives us a little bit of leeway. We know that there's activity in these particular stocks, so we want to take advantage of that, right? So I'll go back over here to EOG. Okay. We'll find out where EOG. All right. So EOG is starting to come down. We're going to go trail that one as well. This one we can go 2 shares. We're going to go let's say 155. All right, so we're well below where we have room to the upside. The whole idea is to get better pricing and then to allow the market to come to you. So, you know, these could activate or not. They could continue on down. They can continue, you know, go up, hit, and we just put our sell order in. It's all about following rules. Yeah, I promise you, if you follow the rules, you'll be successful. If you don't follow the rules, then, you know, it is what it is. But yeah, now we just sit back and wait. I like to go over here. As you can see, I'm not going to sit there and flex and tell you these are such small accounts, right? But what are they doing? They're growing. I'm making full year dividends amounts on every trade, right? But because of the size of the account, I'm within reason. People's like, okay, well, if I had 100,000, just double these amounts, right? Each time you have a trade, what you're trying to do is keep your trades as close to where you bought them as possible, meaning you want to be around the mean. Your mean, when you bought it, is your average price. Look at these as all your, not your average, but your average price column. All of these are your means. How far are you away from the mean on HCAP? Well, we look at it, you're down $530. So the chances of you getting back to your mean is pretty slim. So SYY, see if that's on the scan. Yes, it is. And it's high up on the Vega. So we go here to SYY. I think we traded this last week. Cisco. Yep. Okay, so same thing. Looks like we can go, looks like only MS. See a lot of stuff coming down. We're going to trail this. We're going to buy 1. Trail at the dividend amount minus small percentage. SYY, $1.80, so we'll go $1.70. This is just my own, you know, you got to put your own little panache on there. Own way of doing things, if it makes you feel better. All right, so now we have 3 orders already in, all trailing stops. So now we just sit back and see what this is doing. Yeah, it's still way up. And it's funny how you get these ones that come up on the scan that aren't following what the market's doing. It's interesting. Took a lot of time and effort to figure this out. let's go back over to Mosaic. This is a little easier to follow when it's moving fast. Yep. So you see a lot of positives there, right? But what we're after, interested in, you won't see them on here because we don't own them yet, are the ones that are coming down where we can improve our positions. Yeah, this one's got a ways to go to get to improve your position, of course, but the ones that are constantly paying, we're not worried about what they're doing. You just let them go because they're going to pay you. I look forward to this market coming down because the amount of money you're going to make from the bottom up is much more than what we're making from the top up, because it comes down to max shares.
When markets are at all-time highs, you'll find with my system that the max shares come down quite a bit, so you can't invest as much. It's a protection mechanism, so you don't have to risk as much in the market at the all-time highs, yet you keep taking profit. Means less risk. But people right now are like, I still got to put 100 shares into that, and you're going to get caught at the top. Not maybe this week, maybe not next week, maybe not 6 months from now, but eventually you're going to get caught with those 100 shares at the very top. And you're going to be like, man, I wish I had shorted that. But the only way, well, I shouldn't say the only way, but what most people end up doing, they take a loss. It doesn't take long because you think you know and you don't know. So people with small accounts, you are the main targets of all institutional traders. They love to see those stops because they will go after them. That's how they make their money. They get you to sell to them. They like buying at lower prices. You're advertising. You're advertising to them. It's like, hey, I'll sell to you. In this case here at HCAP, it's like, hey, I'm going to put a stop in. I buy 100 shares at 8.15. I want to put $1 stop in. So I'm going to do it at 7.15, put my stop in at 7.15, and you're waving to everybody, hey, look at my 100 shares here for sale for $7.15. That's what you're doing. They can see the orders. They wait for enough orders to come in there. Would you rather pay 7.15 or 8.15? If you're an institution, they're going to come after that. They're ready and willing to pay $1 less to take your 100 shares away from you, but you're going to lose it. That's how you figure the market's fixed. Most people think it's fixed. It's not fixed. It's just you got to know what's going on. If you don't have any stops in there, you're not advertising, right? But you need to talk to your financial advisor about how to use stops and ask them and say, well, don't I actually lose money when I use stops? And what they'll probably tell you is, well, you're protecting your capital. And yes, there's some truth in that. But every time you put a stop in, you have less and less capital. So if you have 100 different positions with $1 stop on 100 shares, what's that, $10,000 in losses if they all hit those stops? And basically, there's no information out there on stops and how much money is actually taken out of people's pocket on stops. That's Warren Buffett if he uses stops. He doesn't need to. He got 400 million shares, right? We just scale it down. If he's got 400 million, I want 4,000. What's the difference? I'm just not making as much in dividends. Doesn't matter. If I put a stop in, I'm going to take a loss. He doesn't take a loss. Why? Because he doesn't use stops. Now, you need to investigate it fully. I'm not giving you any type of financial advice. I'm just telling you how it works. Yeah, but if you're buying into these high-flying stocks and you're that trader that, it's been taught to use stops to protect your capital and go for 2 to 1, it's easier to hit a stop than it is to hit your profit target. You go 1 to 1, you're a 50-50 trader. If you go 2 to 1, it's more likely, just price action alone, You'll get lucky 50% of the time to the upside and 50% to the downside. Play with the numbers, use common sense. Don't invest any real money till you totally understand what's going on. The easiest way that I've found over 25, 30 years is to invest your money. I'm not saying you can't lose money, because stocks or companies can and do go out of business, but they don't all do it at the same time. So if you own thousands of different companies and a little bit of each company, you make the same return and you end up with less risk because you have less exposure. But if you put all your money into one bucket, one hole in that bucket, and it drains, and that's it. You ain't got any way out. Okay, so we picked up EOG. We'll go over and take a look. Oh, we need to open up the portfolio. Look and see. Okay. Get to the right portfolio. There it sits. And the first thing we do, come in here. Okay, and we see we're only trying to target $1.65 on 2 shares, so it's not a lot. We're going to add 50 cents because of commissions. You don't have to worry about that if you're using something other than the pro version of Interactive Brokers. Okay, and we're going to close this position, the closing order, and we're going to go to 75.45. Okay, we just sold or bought FANG. This was our other order, but we're going to go to our chart first. You have to be very specific. Okay. This is just a tool how I can locate the 50% move back down. This would be my second buy. Not interested in anything else that happens outside of that. This is good for a week. All right, I'm going to take a picture of that, send that on to our friends. Do that right away. So we're long EOG. Well, for some reason that didn't save. Chart image. Okay, so we're going to be long FANG. So we find FANG, same account. Okay, so 8307. Okay, we're only doing 1, so it's plus $1.60 plus $1. So 85.70 is our target. All right. As we go over to our chart, FANG, annotate our charts. Put my alert in to let me know if we get close before I put in another order. Keep our order screens, readable. As if you put an order in at this level right away, I mean, you'd have thousands of orders just sitting in there, and it gets confusing, especially when you're working. I think I've got like 8 to now maybe it's 10 different accounts that I'm working.
take a picture of this, send it on to Twitter. FANG. We got FANG. All right. Well, we're all caught up now, and it's as simple as that. You keep everything looking the same. I'm not looking for some weird support line. This is just math. If you buy it at this level, I'm going to buy it back down at another level. If you watch it at this any amount of time, you'll figure out what I'm doing. Then you can adjust your trading style to it. See, that FOMO is going crazy right now with a lot of people. They're sitting behind their screens just itching to pull the trigger to put big money into the market, and now's not the time to be doing that. You have to be very careful in these times. When everybody else is wanting to buy, I want to be selling, and vice versa. But I like them dividends coming in. I don't have to work for them. My money is working for me. I'm not working for my money. All right, so 2 simple orders. Everybody waiting on that news, whatever the news is for today. A lot of positives on there. Let's see what that means doing. Notice whatever I sold yesterday, I don't care about it. It doesn't matter. It's just an occurrence. Okay, so today we're gonna have, so far today we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13. So we have 10 dividend payments, each one's an occurrence, and then we have 3 trades. We got 2 longs and 1 sell. All right, so that's 13 occurrences. It's just a numbers game. It's very easily won if you play. Let's take a look at that one, see if that one goes up before the top of the hour. There's always something moving up, and there's always something moving down. There's always something sitting the same. You know? I just get lucky on a lot of these where I'm like looking around, but I have so many stocks that I look at. I mean, I couldn't possibly show you all the different portfolios that I work, because it's different accounts, you know, different companies, different brokers, different platforms, you know, different charting programs I've got. This is the simplest way I know to show you how to do it in a basic form. If you get to understand this, then you can use whatever charting platform you want. Heck, you don't even need charts. Charts are not the key to this. Charts are just there. It's something visual. It's easier to look at than the portfolio. The portfolios, I mean, it'll drive you, you know, if you're not used to them, most people just move on. They see this channel and they're like, holy shit, what's this guy doing? And it's like, it's too hard. It's too, you know, they want something easy on the eyes, something that's, you know, beautiful. That stuff doesn't make you money. But people spend a lot of money on it. Oh, looks like we got partially filled right before your eyes. This happens almost every day now. I used to wonder if I'd
catch enough of the trades in a 1 hour, well, basically in a half hour leading up. But we can always go over a little bit if things get a little crazy. I don't know what'll bring this market down. It's kind of interesting with the amount of money that they're pumping in. But I can just imagine the shorters. Anybody who's playing this from the short side, man, they are getting beat down. I mean, their accounts, they must, they're either borrowing way too much money thinking, well, I'll just go bankrupt at the end of this. If the market goes up another 10,000 points, I mean, there's going to be so many people filing for bankruptcy that were traders that will never do it again because they've listened to so many people. Oh, the market's coming down. The market's coming down. You know, you can't make any money on just, having a dividend portfolio. It's like, come on, really? Seen this before. But there's a lot of young investors, a lot of young traders out there that have a Robinhood app. And man, all they're doing is, hey, this is easy money. I can punch this button and blah, blah, blah. And of course, they only tell people when they're winning. They never tell when they're losing their ass, except when it was GameStop. And they're like, oh, well, it's manipulation. It's like, well, I mean, hello, there is manipulation in the market. How do you get around that? Don't listen to people. Stop listening to the so-called gurus out there. They're telling, like, if you can think for yourself, that's the number one step. Decide what you want to do. Are you willing to? I would rather take no losses and walk away and go do what I'm going to do and say, hey, I didn't lose any money in the market, but I don't run around telling everybody, hey, I make this amount of money. But it's amazing how many people are out there screaming and yelling, I'm a trader, I'm a trader. And I'm like, well, that sounds great, but maybe show us some proof. I mean, it's amazing to me how many people, trade online and they say that they're making all this money, and then come to find out they're under investigation for SEC fraud. And then they just calmly go away, and everybody's like, what happened to them? And then they make up all kinds of excuses. And maybe a year later, you see them open up another channel somewhere, and they're doing the exact same thing. But it happens all the time. You just have to be aware of it. Well, are they going to close that last position? You just need one more tick. Come on. Halfway done. So you could just sell that one and not go any higher. That's what happens. Oh, we got about 2 minutes. I'll leave this up running until this thing actually closes out. Bitcoin at 54.5. Just keeps on rolling. Gotta love it.
hang there all day. That was a total of 9, I guess. Just sitting on 1. Yeah, see, it's got 1 outstanding. That's too funny. We'll wait. We'll wait and see what happens. I'll look around for a little bit. It's 9 o'clock, but something will probably happen, or maybe we can just show it later on this afternoon. That's probably what I'll do. I got things to do. So let's go back over there to SCM. No, it's sitting on 1230 now, so it should activate. We're just waiting for the bid. Come on, what's the bid and ask on this thing? Oh shit, it's 12 cents. I think, come on, buddy. Don't matter if you get stuck with one share, it doesn't matter. But all right, we'll call it there. I got time to wait on one share to get, I've got to go into all these other platforms and get everything up to date. But that's it for now. Hey, we'll see you later this afternoon. If you got any questions, you can reach me at T1 Recon Rider on Dividend Collection Team. All right, have a good day.